Ethereum price is all set for 2x rally in the next 3 to 6 months. Cryptocurrency prices are up today, with Bitcoin staying above $48,000 and popular altcoins also showing gains. Ethereum is holding steady above $2,500. Cryptocurrency analysts of the Altcoin Daily YouTube channel have pointed out 3 reasons why Ethereum's price is poised for a significant surge in the coming months. Before discussing this, make sure to smash the like button and subscribe to the channel for more content like this. The first reason centers around Ethereum's final significant upgrade, scheduled to go live in Q1 of this year. The Ethereum Beacon upgrade focuses on reducing transaction costs and enhancing the efficiency of Layer 2 solutions, with the final testnet set for February 7th and the full rollout on the mainnet just a month away. The upgrade promises a refined user experience, marking a crucial step toward a more accessible and scalable blockchain network. The approval of Ethereum spot ETFs, with the final deadline just 112 days away. While the approval is anticipated due to Ethereum futures already being approved globally, the analyst notes that the spot ETF approval could be a sign of an important catalyst for Ethereum's long-term price growth. The hype around this potential approval, similar to what was witnessed with Bitcoin ETFs in 2023, is expected to push Ethereum's price to $4,000. The third reason involves a potential rotation of funds from Bitcoin to Ethereum after Bitcoin's upcoming halving event. Altcoin Daily suggests that while there might be a temporary cooldown in Bitcoin immediately after the halving, Ethereum could take center stage in the cryptocurrency market. The analyst predicts a massive bull run for Ethereum, pointing out the ongoing interest in Ethereum staking, which has seen an increase in participants. At the time of recording, Ethereum is trading at $2,500, up by more than 1% in the last 24 hours. Ethereum, the hard fork that will bring Denken to the mainnet. It will be an actual hard fork of the Ethereum blockchain, although there is no expectation of a chain split. Simply all Ethereum nodes from that moment will start using the new modified protocol that incorporates the changes made by Denken, namely the EIP 4844. In fact, this is not a minor update, but one that introduces new features that were not present until today. The most interesting is the so-called proto-danksharding that lays the foundation for the future edition of the true danksharding. Sharding is, in the long term, the main solution for scaling Ethereum, but the network is not ready yet. First, we will have to go through the proto-danksharding on March 13th. With hard fork, it is meant that the protocol is updated, but the old one is no longer fully compatible with the new one. This happens when the update is significant and concerns fundamental structures of the protocol itself. However, since there don't seem to be any risks of someone refusing to update, there doesn't seem to be a risk of a chain split either. That is, someone deciding not to update and continuing with the current protocol that is not compatible with the updated one. The Denken update. All the Denken update tests on Ethereum testnets have been successful or have brought to light identified and resolved issues. This means that most likely the mainnet update should happen without major issues, as it has practically always been the case in recent years. This update effectively starts the path that will lead, in a few years, to sharding, introducing proto-danksharding on Layer 2. Currently, Layer 2 solutions, and in particular rollups, are the only true effective solution for scaling Ethereum and reducing fees. In fact, it is only Layer 2 transactions that allow for moving tokens at reduced costs, while on the Ethereum blockchain costs still remain quite high, despite the transition to proof of stake. For this reason, first of all, we are working to make transactions even cheaper on Layer 2, thanks to proto-danksharding, which allows compressing the data of the transactions themselves and storing a part of it separately in order to make them even lighter. The cost of transaction fees depends on both the timing of the transactions and, above all, their byte weight, and a significant reduction in weight inevitably leads to a reduction in transaction costs. In the future, this technology will also be brought to the Layer 1, and in an even more distant future, in addition to danksharding, there will also be proper sharding that will further reduce costs. The long-term consequences. Denken will not only have short-term consequences on Ethereum and its Layer 2, but probably also long-term consequences for projects like Celestia, Avail, and INDA. In fact, it should help not only to reduce the cost of transactions, but also the data available on Ethereum, and this could particularly benefit those crypto projects that need to store data on Ethereum. For some time now, a whole new world has been opening up based on the possibility of somehow making different blockchains interact with each other. Sharding is effectively a long-term idea that also goes in this direction, namely that it allows different chains to communicate with each other. That's all for today's video. Make sure to smash that like button and share it with your friends so you can make money together. Don't forget to subscribe for more content like this. See you in the next video.